So it gave me a return of 2.79% if I calculated based upon the 4% return. But if I calculated based upon the 8% return, it gave me a return of 4.15%. While browsing the internet this morning, I came across an article which looked something like this. Now it said that LIC scheme, under an LIC scheme, you get rupees 4 lakh rupees by just saving 29 per day. Check more for details. It's a very interesting proposition, right? You just need to pay 29 rupees per day and you get 4 lakh rupees. But for how long do you need to pay? What's the catch? How can you get such a big amount of 4 lakh rupees by just paying 30 rupees per day? Whether this is real or this is fake, what kind of an LIC scheme this is? If you know me and if you know my channel, I'm always very inquisitive about the schemes which promise you to give a very, very big return in lieu of paying a very small premium. And that's what I try to find out to say, okay, what is the real return? What is the catch? Is it really a scam or is there any truth behind it? And that's exactly what I'm going to be doing as part of this honest review of this particular scheme. We'll try to find out what this scheme is, what actual returns it is giving to you, and what are the various other parameters that you should be keeping in mind before you invest in that scheme. So let's get started. So when I started digging deeper into this particular article and tried to find out what it is really about, I found out that it is about an LIC's Aadhaar Shila policy, which is a non-linked participating individual life assurance savings plan, which is exclusively for female lives. Now, if you have been watching my videos, you would know that I've covered multiple times what this terminology stands for. But in case you are a new visitor to this channel, let me cover it once again for your benefit. Non-linked means that any particular return that you will be getting will not be market linked returns. That means the premium that you are paying, the premium will not be invested for returns to be gained out of market. That means that any money will not be linked to equity. Participating means that any bonuses that the company will declare, you will have a participation into it. Now, just over here, by looking at this term, it simply means that this is not a guaranteed plan. So when the company says that, or when the article says that you're going to get 4 lakh rupees, actually there is no guarantee that what amount you may be getting. You may be getting lesser than that or more than that, and we'll try to find more about it. It is an individual plan. That means you can take this plan only on a single life, and it is a life assurance saving plan. They're calling it saving plan because here you're getting money back. Now, plans are of two types. One is term plan and another are non-term plan. I know we can categorize it in many different ways, but just for the sake of simplicity, I'm dividing it into two categories. One is term plan, where you just pay for the insurance cover, and the other is where you expect returns to come, which are return of premium, endowment plan, ULIP plans, so on and so forth. And that's why it has been called as a savings plan, because they want to target the female population and say, if you deposit the money, you are going to get money back. But are you going to get the money back, and how much? So let's try to dig further deeper into it. Who is this plan aimed for? See, the minimum basic sum assured per life is 75,000 and the maximum basic sum assured per life is 3 lakh rupees, which means that it is targeted for a set of people who want to take only limited amount of coverage for their lives. It is not particular targeted for individuals with high net income or people who are really looking for getting a higher cover, because the maximum basic sum assured is limited to only 3 lakh rupees. You can take the life cover for an amount anywhere between 75,000 to 3 lakh rupees as long as it is in a multiple of 5,000 rupees. Now, minimum age is 8 years and maximum age by which you can take this plan is 55 years. Policy term is 10 years to 20 years. Policy term is the term duration, or is the duration for which you have the cover available. Okay, that's what we call as policy term. And premium paying term, same as policy term. So premium payment term typically are of three types. One is a single premium paying term, where you say that I want to just pay a lump sum amount this time and I want the coverage for the whole policy term. The second is a limited premium payment term. Limited premium payment term means that you're paying for a fixed period, for a smaller period of time, and you get the coverage for the entire policy term, which is 10 to 20 years, whatever you choose. And the third is the overall policy term, whatever is the length of policy term, you get, this is called the normal payment plan. You get the coverage, or you pay the premium for the whole duration of your policy. Maximum age at maturity is 70 years. Just talking about premium paying term, I have specifically created a video saying which is the best premium paying term. You can watch that video by clicking on the button on the top of the screen. So the total basic sum assured under all policies issued to an individual cannot exceed 3 lakhs. So if you are an individual taking this plan, You can take multiple plans, but the aggregate sum of that cannot exceed 3 lakh rupees. Now, further, when I tried to find out, they had a very good example over here, which says that suppose if you are 30-year-old and deposit 29 daily for 20 years, and here is the first catch. Firstly, that they said that you are depositing 29 daily, and secondly, they said 20 years. Now, this plan offers you payment term of monthly, quarterly, half yearly, and yearly. That's it. There is no daily payment plan. So effectively, you can never deposit the money daily. Now, let's give them a discount and say, okay, I'm not going to be paying literally daily. Let me pay on a monthly basis, and 29 to 30 is equal to be 870 rupees. The second thing it says is you're going to be paying this for next 20 years. And that's where caught my eye, saying, okay, it's not that you're going to be paying this amount only for a very small period of time. It's actually 20 long years. Then in first year, you will have to deposit a total of 10959. And then they say that now it will also have 4.5% tax on it, right? Which needs to be paid on your first year premium. Actually, 4.5% is paid on first year premium. And the second year onwards, the premium carries a tax of 2.25%. Okay. Next year, you will have to pay 10723. In this way, you can deposit the premium on every month, quarter, half yearly, or yearly basis. Now, they are saying that you can deposit on these basis, but they are saying that you are actually depositing daily. So there's a contradiction over there. You will have to deposit 2,14,696 in 20 years, and you will get 3,97,000 at the time of maturity. So you're paying 2,14,696, but you get this particular amount. However, as I said earlier in the video, you're actually not getting the 3,97,000 as the guaranteed amount. So they have not kept over here, they have not written over here saying it is not guaranteed, but we'll also try to find out actually what return it is generating. And is it a good small time saving plan? Can you take it along with some other investments? Let's try to find it out. Maturity benefit, it says, is because you're getting this at the time of maturity. It says on life assured surviving to the end of the policy term, provided all due premiums have been paid, sum assured on maturity along with loyalty addition, if any, shall be payable. And this if any is going to become very, very important. Why it will be, I'm going to covering an example from directly from LIC's brochure, and you'll find out why I'm saying so, where sum assured on maturity is equal to basic sum assured. So now if we try to do calculation, if we try to find out actually how much is the return you're getting. So you're paying in all 2,14,696 over a period of 20 years, and you're getting around 3,97,000. What is the real return that you get? So you simply need to use the future value formula. You can use the XIR formula depending upon whatever you're comfortable with. And I'll just show you on the screen that you actually get a return which is approximately equal to 5.85%. That's correct. You get a return which is around 5.85% if you're paying 870 rupees monthly, and I have not taken into account any tax being paid on it, or in terms of if you're taking any tax benefit. Now, it sounds like a decent return, 5.85%. Yeah, if you put even tax of 4.5% or etc., then again it will come down to around 5.5%, which is good. So is it a good scheme to invest in from a small saving perspective? See, again, when you put amount in this particular scheme, you're not going to be getting your money back. So once you have deposited over here, that means for the period of the policy term, your money has got locked out. So even if you're spending small amount, you cannot take it out even if you want to, and you're going to be locking it out for next 20 years for a meager return of 5.5%. Now let's take the example from LIC's brochure and try to find out exactly why did I say that loyalty bonuses, if any, will be payable. So the example over here states that the age of the life assured is 35 years, policy term is 20 years, basic sum assured is 1 lakh, and premium excluding taxes is 3699. Now, in this case, what is happening is they've shown that end of the year, after 5, 10, 15, 20, there is some loyalty bonus that is getting added. And this is, they've taken two scenarios, scenario 1 and scenario 2. Now, why it is important to understand that? Because as per IRDAI, the scenario 1 talks about that you are getting the returns at an assumed rate of 4%. So assuming that you are getting the return at 4%, and this 4% is calculated how? I have not been able to find out. It is a bit of a complex thing, I have been told, but assuming whatever they say as 4% is the scenario 1, and scenario 2 is the 8%. So if you get, in cases when they are giving you return at 8%, then you have loyalty bonuses like this, and this. If they declare the bonus at 4%, then actually you don't get any amount paid. Okay, so please bear that in mind. And if you have something between 4% to 6% bonuses being declared, I think last year the bonus was declared somewhere between 5 to 6%. So the amount will be lesser than what is shown in the screen. So that means this is not really a given or a guaranteed amount. Now what they're saying is total maturity benefit including loyalty addition. So loyalty additions are paid only at the time of maturity. So while it is showing that the sum is getting accumulated at these particular intervals, it will actually only be paid when you are going to be getting the overall amount. So at the end of the 20 years, in case one where it is 4%, what is the maturity amount you are going to get? You are going to get 1 lakh rupees. Now how much have you paid? You have paid 73,980 rupees. You are going to be getting 1 lakh rupees. And in scenario 2, where you have the 8% bonus declared, you will get around 1,16,500. In reality, you will get amount somewhere in between these. It probably will be more than 1 lakh rupees, but less than 1,16,500. So what does this translate to? What return does it translate to? So I put this again through a formula. So it gave me a return of 2.79% if I calculated based upon the 4% return. But if I calculated based upon the 8% return, it gave me a return of 4.15%. So again, between 2.79 to 4.15% is the return we are getting basis the example that LIC has shown us. Of course, the more the premium, the benefit that it gives to its customer. But bear in mind that none of this amount is guaranteed. So all of these amounts are speculative. Actual returns you will only be able to come to know when you reach the maturity period. So then comes the $1 million question: is it a good plan to take? See, for the people who cannot afford a lot of premium, right, they need a plan for their basic coverage. Now the government has also launched the LIC Saral plan, which I've seen and I've compared and I found to be not so lucrative, and hence this plan may be good for people who are looking for smaller coverage and they think that by spending small amount they will actually be able to get some good savings as well. But for people who are looking for really great returns, this is a meager insurance cover. It is not an insurance cover one should aim for typically if you are well to do, and you should really look for good amount of term cover, at least based upon your capability, around 5 to 6 times of your annual income. That is what you should be really aiming for. The returns, as I've shown, are somewhere between 2 to 5% depending upon how much is the bonus declared, and that we will come to only at the end of the period. A small video for you. I hope it will help you in taking a decision whether this is a good plan or not. If you have any questions, put them in the comments below, and do let me know if you have any suggestions about this video. I'll come back again with another video in a short span of time. Till then, bachate rahe, kamate rahe, because every paisa matters.